$500 million. The acquisition marks a strategic push into rural and community hospital technology in the US, a segment with strong demand for digitization. To discuss more on this, we have with us Nithya Balasubramanian, who is the whole-time director and group CFO at IKS Health. Very good having you here, Ms. Balasubramanian. Give us a sense first, ma'am, with regard to the acquisition itself. Talk to us about what led you to target this particular company. Why and what is unique in terms of the niche that this one has versus others?
Thank you. Thank you for having me today. I think the most important strategic reason for us to look at TrueBridge was the ability now for us to be able to create this combination of what we call a system of record and a system of action. So if you look at TrueBridge actually is the market leader when it comes to the system of record, also called the EHR, EMR, electronic medical record, electronic health record system. So in the rural and community segment, TrueBridge is a market leader when it comes to the system of record. And what they've been trying to build over the last decade or so is also the system of action, which slaps on to the system of record. Now, IKS, as a lot of your viewers will know and appreciate, has been a market leader in the ambulatory segment in the system of action. In fact, we have one of the most differentiated 16-feature platform of system of action. So now this ability to combine the two and therefore be able to drive the outcomes that the customer actually cares about is actually multifold in this combination. And what this combination also does is create this AI training corpus on which we are able to deliver the system of action and the benefits from the system of action in a manner as to maximize the benefits for the customer. So the combination, therefore, is AI forward, and there is also significant protection from the AI disruption that the market is thinking about.
And what's the kind of price at which you acquire this? Because $500 million is large, even for your standards. It's 20% of your market cap. So what's the kind of thought process with regard to what this adds in terms of top line and the valuation at which you've purchased it?
So the asset TrueBridge, their revenue, last 12-month revenue that they reported in December was about $347 million and an adjusted EBITDA of about $69 million. At the consideration, the EV of $565 million that we paid for them, if you look at the last 6-month average price, we have paid about a 25% premium, or it's approximately 8x EBITDA is the valuation that we've paid. And of course, for all the benefits that I laid out earlier, which is being able to build this combination of system of record and system of action, is why we feel this deal is very attractive for IKS.
How does this stack up in terms of value accretion to IKS from a financials perspective? Break it down for us. So currently you do around 1,000 crore of EBITDA at this point. So you trade at a far higher multiple. So therefore, this is value accretive for you, technically speaking. Is that the right way to think of it?
So we spoke about this earlier with our investors on the call. In general, we don't give out guidances. So think of this more as a true north, if you will. From our current run rate of 1,000 crores of EBITDA, by FY30, through the realization of growth as well as synergies from this acquisition, we hope to be able to get that EBITDA number to 3,000 crores. So you're looking at a tripling of the EBITDA. And of course, as we discussed before, this is an all debt, funded entirely through debt. So you're looking at this kind of expansion of EBITDA without any equity dilution.
What's the rate at which you're taking on that debt? Yeah, because that also becomes important. So how does that stack up and how does it add to EPS and profitability, if you can give us a sense?
So as I mentioned before, TrueBridge has an adjusted EBITDA of about $69 million. And if you look at the debt that we've assumed and therefore the associated interest, we look at the amortization that'll come on once we book the intangibles on the book. Net of all of that, we believe that the deal will actually be PAT accretive from the get-go. And remember that this is without any synergies being realized. Right? So we believe that the deal will be PAT and EPS accretive from FY27 itself.
TrueBridge obviously adds to a certain extent to technology and enablement for you. But talk to us about this new wave of AI and what kind of a risk that poses to your entire business as a whole, and how does TrueBridge kind of help you circumvent that?
So if you look at our business, we have always built our entire business where our go-to-market is through an outcome-based pricing. Right? So we have always, therefore, believed and have always communicated that AI is a very, very significant tailwind for the IKS business. If anything, with the TrueBridge combination, that becomes even more true. Right? If you look at TrueBridge's business, about $120 million is actually a pure product business, which is the electronic health record, electronic medical record system that I was talking about. And the remainder of the business is largely revenue cycle management, which again, when you're able to bundle it along with the EMR EHR services, the stickiness improves several fold. And given that our business has always been outcome based and their pricing has also always been outcome based, we genuinely believe that AI is a massive tailwind for IKS as well as the combination of IKS and TrueBridge.
Right. How should one analyze, therefore, the effective date, etc., in terms of the timing of this takeover, and are the clients different for TrueBridge versus you, and therefore does it also add a client stack to your existing client base? Give us a sense of that.
So the client base is entirely complementary. IKS has traditionally operated in the ambulatory or the outpatient clinic segment, while TrueBridge's area of focus has always been the rural and community hospital segment or the acute rural space. So the customer segment is entirely complementary. And I think your other question was about the timing of the deal and the closure. So we signed the definitive merger agreement yesterday. We believe with all the regulatory approvals, etc., that are required, it'll take us about approximately 3 months to be able to close the deal.
Does it add, therefore, to your organic growth as well, just this acquisition? Just if you can give us that perspective.
This is complementary, as I said. So now
Yes.
it gives access to an additional addressable market or TAM in the rural and community space.
So what are the internal kind of goals that you have to try and make the most of the new client base that you get from TrueBridge?
So several opportunities in front of us, right? I think in the near term, you will see us focus on three things. One is they have a very strong and sticky EHR customer base into which we want to be able to continue to cross-sell the revenue cycle management services. So this is an existing captive customer base into which we want to be able to drive growth for RCM. The second is within the rural and community hospital segment, there is significant scope for selling RCM even beyond their EHR EMR customer base. So that'll be the second leg of growth that we focus on. And beyond RCM as well, IKS has had very strong presence in clinical documentation features. So we will potentially be able to offer these clinical documentation features as well to the rural community segment. And the next important area of focus, again, not in that order, would actually be to be able to extract cost synergies. Because IKS has always been a global delivery organization, both in terms of leveraging technology as well as human capital, we want to be able to bring to bear our operating model into the TrueBridge model. So these will be near-term focus in terms of the growth as well as cost synergies.
And Nithya, give us a sense. I'll make this into a two-part question. One, you're sitting on a large receivable number. Contextualize that for us. Has that at all unwound? I'm looking at H1 FY26. The second piece is with regard to this buyout that you've done. It's a leveraged buyout. Therefore, do TrueBridge's cash flows get used up to pay down the debt? Is that the right way to think of it? And how does therefore the debt get paid down? If you can give us a perspective.
So in terms of accounts receivable, I think any growing business, you'll actually continue to see AR go up. If you're looking at cash generation, IKS's cash generation has actually been very, very strong. We tend to be in the range of north of 90% of our EBITDA typically gets converted into operating cash flow. So I don't think there are any changes to that metric. In terms of how will we pay the interest on the debt, I think the math that we had shared earlier today in the investor analyst call should give you comfort that the incremental EBITDA that we are getting from the pro forma from the TrueBridge acquisition, that should be more than enough to cover for the the interest payment as well as the incremental amortization on the intangibles that we book, which is why I mentioned earlier that this is going to be a PAT accretive deal for IKS's investors.
Understood that. What about the principal? Sorry, Nithya, if I've not got this right. So how long for the principal to get fully paid down, or what's the kind of glide path for the pay down for that, if you can give us a perspective?
So in addition to the approximately 3,000 crore EBITDA range that we had guided to by FY30, we're also saying that if you look at my current net debt levels, in December, we had reported about $32 odd million of net debt levels, and we believe that by FY30, we will be able to reach similar levels. So you can therefore assume that the cash generated between IKS and TrueBridge will be more than enough to cover for the principal payments as well. And we'll be able to pare down our net debt to significantly low levels that we enjoy today by FY30.
Thank you so much, Nithya. That gives us very good perspective with regard to how this deal is getting structured and how you see it. Thank you for coming in.
Thank you for having me.
Okay, what we'll do, viewers, is step into a very short break. Continue coverage on the other side. Stay with us. That's, of course, IKS sitting in the green, management speaking to us about their latest acquisition.